This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard.
Hello everybody, welcome back. Let's have a look at some of these charts. By the way, I know that my mic is wrecked. I'm getting a new one tomorrow, so just persevere through this last video. Tomorrow it should be crystal clear, hopefully, anyway. So, before we even start, it's worth recognizing that the CPI data is coming out tomorrow, so it looks to me as though markets are pretty much just sitting back really on the sidelines waiting for that. And I can completely agree with that kind of mentality. So the one thing that goes against all this inflation is, goes to higher inflation is the size of the Dixie chart. I mean, it's just going on and on and on, high after high after high. I mean, the cup and handle that we saw here broke out and it just continues to go higher. So you can't fight the Fed, and the Fed are not allowing anybody to get close to them. You can't really call a top on something like this. I'm pretty sure the only thing we can do is wait for the Fed to call their own top. There's no way that this can be, I suppose, dealt with other than it's just constantly going to be bullish. But we said that back in September, so we should just accept it for what it is and allow it to continue to go up. As for everything else, though, so this is oil. Oil's still marching down, and this goes to my overall theory that inflation should start to peak if it hasn't already, due to commodities coming down and that, you know, fuel prices being one of the main components that we can view on a chart basically on a daily basis. Whether or not this has come down enough over a longer period of time, a long enough period of time to reflect on the next CPI is up to, we'll see tomorrow, won't we? As far as the Nasdaq and the pre-market concerns, I mean, it's down, and we've been rejected once again on this 50 exponential moving average on the daily, but more importantly on the weekly, we found ourselves on the magical 10 exponential, which is where we've had all these big problems of this consistent downtrend stroke bear market, whatever you want to call it, and so this might be it. This might be it. The only thing that's going to save it now, I would say, would be inflation coming down and then confidence resuming in the markets. But for the moment, it looks like a continuation of its previous behavior, which is every time we move up to it, rejection, up, rejection, up. Ooh, we did break above it a little bit. Rejection, 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 blah, 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 blah. So it's a consistent theme here, 10 exponential finding rejection on the Nasdaq. So let's have a think about Bitcoin. And let's work out what's going on with Bitcoin. So yesterday, in fact, for the last few days now, we've been talking about the inverse cupping handle. The inverse cupping handle validation would be a breakdown from around 19,000, and then you could probably argue that maybe 18,000, where these two wicks more or less danced around, could also be the inverse cup. For me, I'd probably rather view it as far as 19,000, and then we'll be looking for some new lows to be formed, or maybe even just the last one swept. But it's not a good look, because as we saw the cup and handle breakout for the Dixie, these are the sort of moves that you would expect to see after a cup and handle. So there's your cup, there's your handle, the breakout takes place, and then we move up. So this is an inverse one, so obviously that means breakdown. And so, yeah, new lows I would expect to be formed if this were to happen. We were talking about the potential invalidation of this if we were to close above 21,700, 21,800, thereabouts. But we came up to that level and basically rejected from it. However, let me tell you something now. By doing that, this has formed a traditional cupping handle, which could mean that actually if we do bounce from this level and come back up to this level, this wouldn't just be invalidation of a previous inverse cupping handle. This would be validation of a existing cupping handle, a bullish one. And so, look, I'm not here to tell you which way it's going to break. There's obviously, you've got an inverted one, you've got a traditional one, you mix them all together, what have you got? No edge. You've got no edge, basically. It's a 50-50. And that is pretty much how the markets are behaving today in anticipation for the CPI data coming out tomorrow. So if I were you, I'd also sit on the sidelines as well. It might be that we do bounce from this 19,000 and form the actual traditional cupping handle, to which we break out and go all the way up to 1 million. Probably not, but you see what I mean. At this very moment in time, the range is in the middle of an inverse or a traditional cupping handle. But aside from all of that, the general direction is down. We all know that. And if we move it to a weekly, just to see the parallels from the from the Dixie. Look, we've got 10 exponential being a problem on the weekly here, here, came up over it here, rejection, and since then we've actually, the last moving average we touched of any significance outside of this 20 weekly that we touched last week was the 7 simple. So this is usually the last stages of super bearish momentum, when we start to float away from the 7 simple moving average. You know, if you're in a bullish trend, you would be surfing that all the way up, and then the last sort of tags of that mark the parabolic highs, and then you break down from that. Same over here, sort of start moving away from all these moving averages, and then finally gives up the game. It's the same on the way down, but obviously with the economy and the inflation and the rate hikes and oil and commodities, all of this, like, we have to accept that the odds are against Bitcoin breaking out at this very moment. But the one thing that we do want to wait for and we want to listen to and hear is, again, the old men at the table. And we started to think about the everything bounce last month, pretty much just over a month ago. And it worked out to an extent for stocks and major indexes, less so for Bitcoin. Confidence in Bitcoin is pretty much at an all-time low. This doesn't mean that you know, that we're expecting sort of like major lower prices, although, you know, until the situation is resolved, we could easily form lower prices, and I mean like new lows. So we're talking breaking down below 17 towards 16, 14, 12, 10, 8, whatever. It's all yet to be decided. There's nothing on this chart really on the long-term time frames which are showing any signs of major moves up. And we should only really assume that the direction is down. We've got moving averages crossing below each other here. We've got the 10 exponential over the 200 exponential. It's not such a big deal, but it's not a good thing to see. And so yeah, caution is probably the best thing to do this week. We'll see what the situation is tomorrow when we get the inflation data. And as far as today is concerned, it's probably best to just to hold off, because even though that yeah, we could bounce from this level today and move back up to the top side of the range, or we could break down from here today, because especially, you know, forming an inverse cupping handle, if that becomes a reality, if that actually starts to form and we do break down below 19,000, then yeah, I'd say new lows are very likely at that stage, and could even happen today. So it's not a trading, it's not to be traded, to be honest with you right now. Not when there's so much to be decided by the old men at the table tomorrow. So the best thing to do is to sit back and wait, and we'll see how it all plays. But yeah, I don't like the look of it right now, and with this, I would probably transfer that to anything and everything. We're looking at certain bullish setups across the board for altcoins versus their Bitcoin pairs, and some of those are still in play. I mean, this is ICP, technically still in play. We do need to move higher from this over the next 24 to 48 hours on its Satoshi pairs. There's a whole range of other situations like this that are occurring on their Bitcoin charts. But as we always say, you can have the best setup in the world for an altcoin, and it's invalidated because Bitcoin won't allow it. And so we should just accept that for what it is. These are good setups, but they could easily just get cancelled out, written off immediately, because Bitcoin just gives up the game. So sit back, enjoy the rest of your day. There's no need to get too involved in trading today. If we get lower prices, we get lower prices. If we get higher inflation, we get higher inflation. We'll just have to try and reassess and readjust. Like since the last CPI, which was obviously showing inflation was higher, we actually did quite a number of really good trades throughout that period. You know, we did those 50% altcoin trades, 50% gain altcoin trades. We did decent stock market and indice trades. You know, even though we called the top on oil, I didn't short it, but if we had done that, that would have yielded over 20% by now. So it's still a very tradable environment. But as we are on the eve of the CPI, it's probably the worst day to do anything, because charts, as much as they can tell us things, especially if we're looking bearish on these charts, which is probably the right thing to do generally speaking, tomorrow is like, it's like playing roulette it's like playing like blackjack or something. You know, it could go either way. We don't really know what it is going to be. I expect, given what the Dixie is showing us, is that it's actually probably still going to be high, because the Dixie is one of the main components, despite commodities like oil and copper and iron and you name it, all coming down dramatically, reaching specific peaks all the way back in March, more or less. So we'll sit back, we'll wait, we'll chill out, and we'll see what tomorrow brings. I know that's a boring kind of analysis, but I think it's the most appropriate one. Like I say, we made all those epic trades after the last CPI, which was still showing inflation was high. We still managed to crush the market, all markets, and I imagine we'll continue to do that. But it doesn't mean we have to trade every single day. And I think today is one of those days where we don't want to trade. Probably not even tomorrow either. Anyway, I'll leave it with you there. But thank you for watching. Hope you have a nice day. Take it easy.